rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we are back with another Forex education video. I created this channel to help as many people as possible become independent and profitable traders. So if that's something that you're looking to do, make sure that you hit the subscribe button, especially if you find yourself coming back to this channel and the content is helpful and easy for you to understand. If you are new here, I encourage you guys to explore the playlist that I have because there are over 360 videos geared towards beginners to help you improve your trading. If you are a returning subscriber or viewer, thank you so much for coming back to the channel. There's so many things that you could be doing right now, so many trading channels you could watch on YouTube, and you decided to click on this video, and I really appreciate you guys. All of the love and support does not go unnoticed. In fact, your engagement has been helping the channel grow so much because when you like, subscribe, share, and comment, it pushes the videos out into the algorithm to help other traders find them. So thank you so much for that. In today's quick video, I'm going to be showing you guys an intraday trading strategy on Tradingview, and you can actually do this without any indicators. Now, there's nothing wrong with indicators. In fact, I like to use one indicator in particular called the stochastic, but if you're new to trading, you can get thrown off by the number of indicators that there are, and sometimes what works for one strategy may not work for another strategy. It's not really a one size fits all. So I'm going to be showing you guys how to trade without any indicators. It does take a little bit of patience though, but patience is something that you have to learn if you want to be successful in trading. Now, first and foremost, I always encourage you guys that you should have some type of trading checklist or routine so that when you come into the market, you're not just clicking anything or panicking based on what you're seeing. Now, I have a simple trading checklist here. You guys can feel free to duplicate this and see if it works for you, or if you already have some type of indicators on your chart or a certain way that you like to trade, make sure that you're asking yourself questions about your method. If you have an indicator on your chart, you should be looking for certain entry confirmations and exit confirmations just to make sure that you are following a process. Now, you will not win every trade that you take, but if you found a process that works, I will honestly say just stick to it and continue to duplicate it and work on refinement. But don't switch your strategy every time you lose a trade because that's really not going to help you at all. So my trading strategy is pretty simple and straightforward, but today we're going to be doing it without any indicators. And again, here's my checklist. So I'm going to put the chart in replay mode so that we can work backwards and see how to do this strategy without any indicators. So the first thing that you are going to want to do is something that's been helpful to me is to use the session breaks. Now you can get to the session breaks by clicking on your settings, clicking on your events tab, and turning on session breaks. Now you can customize your session breaks. If you want the line to be a different color, you can definitely do that. If you want it to be a little bit thicker, you can do that as well. And you can also change it from a dotted line to a straight line, whatever floats your boat. I typically keep it standard. Now, what the session break does is it breaks the chart into different periods. So if I'm on the hour time frame, we will find 24 candles between here because there are 24 hours in a day. If I was to go to the 4 hour time frame, we will find about 6 candles between each session because 6 4 hour candles will equal 24 hours in a day. Now, this is going to be extremely important because we need to be able to identify our session highs and lows to see how the market is reacting around that area. Now, you can use horizontal lines, horizontal rays. You can use circles. I think lines are pretty good because they go across your entire screen and you can see other levels of support and resistance as well. So let's just take this section for example. The first thing that you're going to want to do is put a horizontal line at your previous day's high, and you're going to want to put a horizontal line at your previous day's low. Now, this is important because depending on how the candles react around these key levels can help you determine if you want to enter that trade for a buy or for a sell. Now we can look at the market here and we can see that this was the previous day's high and the market tried to get back up to that level. However, it didn't and it continued to sell. So based on the reaction around the high, we found some resistance and that would have been a nice opportunity to sell. And we're actually going to work through the process to see if this works multiple times or if it's just a one-off thing. So I already put the chart in replay mode. We're going to go ahead and identify this day's high and this day's low because we can see how the candles are going to react around that section. Now, right here, we saw that the candles were actually respecting the previous day's low. However, the market was still in a period of consolidation. Now, usually if the market is consolidating, what you want to do is wait for a break of structure either above or below that previous day's high or low because that will help you determine which way the market is going to go. So I wouldn't be in a rush to enter the trade right here simply because the market has been consolidating and although we did get some support at the low, it's having a hard time getting any higher than this area. So with this strategy, what you really need to do is simply just wait to see what the market does around that high or low and if you get a clear signal. Now, again, what can happen is it can be supported by the low and it can continue to go up and create new highs, or it can actually break past the low, letting us know that the uptrend that was happening is no longer valid for this time. So again, I'm not going to be in a rush to jump in simply because I don't have that break of structure or additional confirmation that I need, but we can go ahead to the next candle and see what happens. Now, again, we are seeming to be supported by that previous day's low. However, if you don't feel extremely confident, especially with consolidation, the best thing that you can do is wait. And sometimes it's just not an ideal time to trade. Every time you open your charts, you are not going to find a great opportunity. So we're just going to push through. And as we can see, this market is still in a period of consolidation. Since we had our new session break form, you want to make sure that you are adjusting your highs and lows to the previous day so that you can always stay on trend. Now, we can see that this candle appears to break above the previous day's high, but let's wait to see what the next candle does to see if this is truly a break of structure or if this is a fake out, because you can have a fake out or a breakout. Now, what we do see is the market starting to reject that previous day's high, so this could be an opportunity to sell. Now, again, the break of structure has not happened. However, we are getting that reaction off of the previous day's high. So if you were to enter this trade for a sell, you would set your stop loss above the previous high, and then you would set your TPs at previous lows or wait to see what happens as the market continues to fall. Now, that was a really good example. All we did was set our previous day's high, our previous day's low, and see how the market reacted around that area. Now we can see that the market did sell. We were able to secure some profit, but let's see what happens when the market comes back to revisit the previous day's low. Now, if you get another rejection, this can be confirmation that the market wants to continue to sell, or we could push back up into that consolidation zone. But let's go ahead and see what happens. So we come to the previous day's low, and again, we get another rejection. Now let's see what happens on the next candle. It seems that it wants to push back up into this area, but we really cannot be too sure about that. So let's just continue to wait and see what happens. Because sometimes you get a true breakout, and then sometimes you really get a fake out. Now we've already had our previous day's lows broken. We're now finding resistance around that area. This could be another opportunity to sell. We could be right, we could be wrong, but Let's go ahead and get in for a sell, set our stop loss above that previous day's high, and see what happens. Now we can see this market continue to fall. And what we want to do is trail our stop loss and follow the trade as it comes down. As we can see, we secured more profit and this market is continuing to fall. Now, as we adjust to the previous day's highs and previous day's lows, again, you just want to see how the market is reacting around that area. Now, we can go to a random place in the chart. We can choose a previous day's high, and we can choose a previous day's low to see what the reaction is. And in this case, we can see the market came down to that low, but instead of continuing to sell, it used it as an area of support. So with this strategy, all you're doing is waiting to see how the market reacts around those strong key levels. In this case, we're using the previous day's high and the previous day's low. Now, if you wanted to start your analysis on the 4-hour time frame, again, you can do the same thing. You just want to see how the market is reacting around that area. For example, if we were to come back to this place in the chart here, and we were to identify our previous day's high and our previous day's low, let's see what happens. We can see we get a huge rejection off of that previous day's high. So if we were to sell, again, you would set your stop loss above a previous high, and then you can set your TP at the previous day's lows and trail your stop loss as the market continues to fall. It's going kind of fast, but I'm trying to move my stop loss down. So we can see that even if the market were to come back up and hit our stop loss, we would already be in profit simply because we trailed it as the market fell. So again, walking away with profit just based off of that simple seeing how the market reacts once it gets to the high or low of the previous day. Now you can use this strategy with scalping as well. If you go down to the 15-minute chart, you just want to do the same thing. You want to see how is the market reacting around a previous key level, and then really just take it from there. Now, again, we did not use any indicators for this strategy. However, if you would like to use indicators, just make sure that you have confirmation questions that align with them so that they're not on your chart for no reason. So if you made it this far in the video and it was helpful, I would appreciate it if you subscribe to the channel. Again, not only does it help you to see when I post new videos every single day, but it keeps the content in the algorithm so that more people can find this channel and more people can learn how to be independent and profitable traders as well. But that's really all I have for you guys today. If you have any questions, you can drop them down below in the comment box. If you guys are interested in personal mentorship or one-on-one sessions with me, that information is also down below in my description box. But that's all for today, rich friends.